Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's September 1st. This will be our chart lesson for the day. And I wanted to start out showing you the daily chart here. You can see we bounced on the oversold here. Looks like we really bounced right off that midline of the blue channel. Um, we could get a little bit of a rally here. What I would expect would probably happen was we might come back to this midline and test it again and then turn back down and head towards this lower line. Now I could have this drawn wrong. It could be like that right there, and that still fits. Um, so we'll just have to see. In fact, that looks like it actually looks more accurate there to me. It's hard to tell because we don't have a lot of information even for the midline. You can see that still gives us a retest of it, and that explains why we found some support there before. So it doesn't mean we can't keep creeping down here, down this side of the line. But I'm going to leave it like this for now until we get a little more price action. If it changes, then we'll worry about it then. But it wouldn't surprise me to see a bounce here. Maybe some short covering tomorrow before going into the holiday. Monday is Labor Day, so it's a holiday. No trading on Monday. I don't even think they have the abbreviated trading Monday if I looked at the calendar right. So, a lot of times they'll trade till noon on a holiday and then close things down. But don't try to trade those days. The volume is low and you get weird movement and it's just not normal trading. So my advice is don't even try to trade those half days. But I do believe that Monday is there's not even any early morning trading. So I think we're closed Sunday and Monday, and the market opens back up at 5 on Tuesday. I believe that's correct. You might want to check your trading calendar just to be sure, or your holiday calendar at the CME. But if I remember correctly, that's what I came up with. But anyway, we did get a bounce today. We were way oversold. We're still close to being really oversold. I wouldn't be surprised to see a little bounce going into the long holiday, some short covering, some of these people that have made some pretty good money on this move down, because this has been a fast move. So, I mean, people that got short up here, I mean, you can see all the way to the bottom, a single contract is worth about $20,000. So there's been some money made by some shorts in here. And so it wouldn't surprise me going into a long holiday that you don't see some short covering and a bounce. Maybe we come back and test the midline and turn down again. Maybe we trade up and before the day's over we sell off again. Who knows? But I'm just leaning towards my experience, leaning towards that we probably get a little bit of a bounce tomorrow, even if it's not much of a bounce, just some short covering, and we could have a big rally day tomorrow. Who knows? So, or we could just turn straight back down and keep going because we're nowhere near the lows yet, in my opinion, nowhere near the lows yet. So. We'll just have to see what transpires, but just be prepared that we might get a bounce tomorrow. So, and you can see it looks like a reversal day today. We opened here, traded way down here, and before the day was over, we closed up and closed up from the previous day as well. So let's flip over to the 2000 tick intraday chart, and we'll go through the trades, and we'll wrap this week up, and we'll head into a long weekend. Alrighty, here's a look at today's chart, and we started out in this range really. We traded down into this, and I failed to mention that this morning, but you can see there was a gap. This is where we opened at 8:30 this morning, and this is where we closed yesterday. So there was a gap in here, and we ended up rallying to fill that gap pretty quickly before it sold off again, and then we rallied on into the close from there. And a measured move on this range, really if you took the whole range into effect, we probably got a perfect measured move there. I moved this up because the support moved up over the day. I'm not going to change it. It'd just be easier to leave it like I've got it now. And but you can see we pretty much moved a measured move plus a little bit. And I think if you adjusted the range to these lows down here, we probably got a perfect measured move up there. But needless to say, it doesn't matter. You got to look at it there, and just in the end, it looks like a reversal day, but we traded down into a new low, and then we rallied strongly and closed almost on a high there. So interesting day, really. Looks like a reversal day. So, but it also looks a lot like a range day that expanded in an equal amount. So, but no surprise that we tried to fill that gap either, and we were way oversold down here. So, we talked about what the daily chart looks like. I mean, we could open up and continue trading lower tomorrow into the holiday, but my guess is we'll probably get some short covering, people taking some profits for the long weekend, because there's nothing worse than uh, going into a Friday with a nice profit. And I showed you what the possibility was. A single contract might have made you 20 grand for some long-term traders, but it wouldn't be anything worse than going into the holidays with a nice profit to wake up on Tuesday morning and find out the market gapped up or something, and you gave all that back or half of it back or even a large chunk of it back. So a lot of people will probably take some profits for the weekend. That's the smart way to do it if you're a futures trader anyway. So, but let's zoom on in here. You see the big picture, the fact that we filled the gap. And usually once you fill the gap, if prices keep going, the next target is the close from the previous day, which would be this red line. And then, of course, the measured move. And then after that, just be the next resistance. And there's one here and one here. And we'll see if we test any more of those. I don't know if we will or not. But that's a pretty good rally from lunchtime on. So last 4 hours looked really good. That last 30 minutes looked really strong there. That's where most of those gains came from. But anyway, we'll zoom in here. We'll go through the trades. There's a few of them today. I'm going to move pretty quickly because I'm ready to wrap this day up. And I'm probably going to take off early tomorrow. All I'll probably do is come in and post the chart. I may trade a few minutes and see if I can find me a good trade if the market's looking good or moving good. And then I'm probably going to wrap up and get out of here. And I'm going to take a long weekend. Probably won't answer many emails after tomorrow. I'm going to take a break. I need a break. And so if you send me anything, unless it's super critical, you probably won't hear from me till next week. So anyway, let's get to the trades here. First trade was right at 7 o'clock this morning. Notice that we were in this range here, and the lows would have been here, and of course the highs pretty much where they're at. And we broke out here, and we notice this little channel working up. You get a close outside, a couple legs up, and then you made a lower high here. Way away from the EMA, way away from the breakout. We know what's probably going to happen. Prices are going to snap back and test the EMA and test the breakout area, even if they're going to go higher. So that lower high there with a big bearish bar, it sets up for a nice sell. It is congested, but being that far away from the EMA, we know what's going on here. There's just the last of the momentum, the last of the buying for this momentum is kind of getting swallowed up here, and then when it runs out, boom, the bottom falls. And so I like that trade, even though that does look congested, that far away from the EMA after we've already had a break and two legs up, and that lower high. If it wasn't for this bar, I'd say you wouldn't even think about the congestion. But with that bar there and you're making those equal lows, it's a little concerning, but I still like the trade, and I still would market red. So you might even could say, hey, this is a failed second entry right here. But the only way is if you traded an engulfing bar, but I think it broke lower first and then turned higher and then traded back down. So if it turns back down here, technically it was a failure when it broke below here. So I don't think basically what I'm getting at is I don't think that sets up right to trade it as a failure. I would skip that trade. And then you get a first entry right here and it turns back up. But there was a second entry on this bar, but I don't like that right there with those matching lows and there's a little congestion. It ends up working, but I think you're better off to wait. And then, of course, you're going sideways again. And finally, you get a little break that comes back and tests the original range high. And then it tests it again. It breaks higher, and it traps people and turns down. Um, you might trade that on the engulfing bar. When it gets to here, you just need room to get out, which there's still a couple of points there, so you got more than enough room. So I wouldn't even be afraid to take it right there because that's very bearish, and I guarantee you they trap some longs there. And you can see how it drops down pretty quickly, and it just kind of keeps chopping down. And then we're going sideways again. Um, I marked this one. It's a little congested. It is a range, but the lows are mostly down here. I mean, even if worst case scenario, you might have marked it there. If you mark it there, I think you're out of room. But here it's even pushing it. So what you really would want to do, I mean, it breaks higher and turns down. I like trading that as an engulfing bar because it is a range. And if you waited till down here, let it break lower and drop a limit order, a tick or two in. I don't think I would let it trade all the way down here and come back. So if you couldn't get in on this bar trading it at the low with a limit order, I'd probably skip that trade. And it's tempting to go long here, but I wouldn't take that one either. Um, I'd wait on a higher low or a reversal, and we don't get anything. It just takes off. I mean, if you took that, I probably wouldn't. I mean, maybe I should make it green. It's if you're going to be aggressive, that's kind of one you'd want to take. But I'd still want a higher low or something here. I just don't like going long right into that EMA. And generally, when you're going sideways, the EMA doesn't matter that much. But not only is the EMA there, but the midline is there, and we could turn down off of that. So I'm just not crazy about that one. It's a pretty big bar. I mean, 14 ticks seems small after the vol tilt we've had the last couple of years, but it's still a pretty big bar for today. And of course, it runs right back up, and you do get a lower high here, but again, there's no close outside that little channel. So its prices are probably going to try to go higher again, which they do, although they don't make a new high. They're trying here really hard, and finally you get a triple test. Enough room to get out there. I like going short there. All you get's a scalp out of that. It just keeps chopping. And of course, you wouldn't want to go long here, in my opinion. I mean, maybe there is a little channel here, and you can see, and you get a break, and finally it makes a new low. But I wouldn't risk that to go long right there. It's just kind of in the middle of a range, because at this point the range is only from here to here. Turns out this is a midline, but at this point in the day, that's your range. And so you're kind of right in the middle of the range right there, and it's just a little convoluted. So I don't think I would take it. And of course, it does drop on down. Unfortunately, you only get a first entry. Now, by the counts, that would call that a second entry, but that's a double bottom. So to me, that's a first entry. Don't trade that as a second entry. It would have worked, and you're expecting a new low. But with all those dojis and sideways bars, I'd wait on a lower high, a second entry or whatever, and you don't get one. It just drops straight down, and then it bounces and goes straight up. Again, I wouldn't go long right there. That bar is too neutral. You do get a high or low right here that could be tempting. Maybe you take that trade. I think I would wait, see if you get a reversal, and you actually get a reversal, but it's not a good tradable pattern, and the bottom just falls out. And so I don't see any way to really get short there either, because this could go a few ticks and turn back up, because we didn't get back to the highs, but you can see we've been turning down right there the whole time. So I mean, that could be traded as maybe a lower high. It's moved a little bit far to be a lower high too, though. So I just think you want to skip that trade, and you just have to kind of watch that one. But then we come down here, we get a close outside, we're chopping along, you get a little failed breakout right there with a double top. Big bearish bar, plenty of room. I like that one. By the time it comes back here, you could take that trade too, but that bar is almost too neutral, and it really looks congested there at that point. It would have worked, but I don't think you want to take that trade either. There's a lower high here. You could call that, you might say, hey, that looks like a reversal pattern too, but this is mostly sideways. If it would have broke right below that bar, and there's enough room there, maybe you take that trade, but it ends up making an inside bar, and you just really can't trade that inside bar. You can't trust those things, and so it does drop on down and work, but it's just not a trade you would take. And we make the measured move down, and you get this tiny bar. I think it's 5 ticks. I mean, when's the last time you can remember a 5-tick bar? I didn't mark it because you're kind of guessing here, but it is somewhat of a double bottom. And the problem is you got this channel and you don't have a closeout side or a new low yet, although we have made a measured move. And we're way away from the EMA. If you want to be aggressive, it's only 5 ticks. You're not going to risk much there. Maybe take that trade. But don't, I just hate to do it because there's so many people that'll see that and they'll start trying to pick bottoms every time. Although it's a little different trying to pick a bottom on a range because that's the way you trade a range. But generally you'll want a little higher or low or something, and you don't even really get that here. You could look at this as a reversal. Watch this. You get a first entry, then it goes higher, and it ticks 1 tick lower and turns up and breaks out the other side. If this wasn't so congested looking, I'd say take that trade. And you might take that trade anyway. It's another one because I guarantee you they trapped the shorts right there. And you can tell they did by how fast it runs all the way up to here before it starts to lose a little momentum. And so either one of those would have been a nice trade. They're just a little aggressive. And then you get a second entry here, but again, it's an engulfing bar. I don't think you want to go long at the high because now you've had a close outside a new high already, although it could make another leg up or go much higher. There's just too big a chance that you get trapped right here. So the only way I would trade this is on the engulfing bar, and then I'd make sure I had enough room to get out, so you'd probably drop your limit order to buy after it breaks above a little further down here and hope you get filled. And I don't think you would have. I marked it just in case, but you do get your close outside a new high, and then you're running down, running lower. This is like a little spike and channel down. So and somebody will ask me this, I know. There's another channel here. Yes, there is. It's a little short-term channel, but what happens here is we spike down and go into a steeper channel. So, but I don't see anything here to trade that I like or anything. Notice you do go short. There's a first entry and then it goes higher and there's a second entry. So I like going short right there on the second entry. And you're looking for a new low on this. You don't really know for sure you're going to start this new channel, but you do. But either way, there's still a reason to go short there because you're looking for a new low. And this channel, that's the first break. So prices are probably going to make a new low here. Let me give this one a color just so it's a little easier. We'll make it cyan just to give it a little different color there. And that turns out to be a great trade. Nice move. Probably get a runner on it. Runs down. There's another two-legged pullback here with a little extra trout, but it just looks a little sideways. It's way away from the EMA. It's not high probability, although it does drop and keep going. And we do get a close outside a new low, and then it looks like we may reverse out of there, and we just kind of chop sideways. I don't see any reason to try to go long here. There's no really good setup. Maybe this failed break lower will probably reverse, but I'd wait on it because there's 3 bars stacked up there. One of them has no body. A lot of stem on that one. There's too much chance you could get trapped there. It turns out to be a nice move, but it's not a reliable setup. You can see we move on up and we get a close outside a new high. We make a lower high. I like going short there. We don't get a reversal setup on this one. We actually come down here. We get a first entry, and there's a second entry here. But look how those bars are stacking up, and you're just up, down. So don't risk that trade right there. If you went short there, you got burned. We're not back to the EMA. We're not really correcting here. We're just going sideways. That could go either way. And it ends up being a failed breakout, but I don't think that's bearish enough to even try to go short on. So it probably is a trap because of that big bullish bar. It breaks higher. but I don't think you want to trade it that way. Um, I mean, you could look at this as a double top, and you get a first entry, second entry that fails. I mean, if you did trade it that way, I wouldn't argue with you too much, but I don't. I wouldn't mark that. I don't. I don't like it. I think it looks more like a failed break out of congestion than anything, and you can kind of see that if I draw the little congestion or range that I didn't have on. It looks like a failed breakout to me, and it's not bearish, quite bearish enough for my taste, so I didn't mark it. But notice what happens, we break out the low, which gives us a close outside and a new low, and we bounce right off the original support, and we run up and we get a first entry, and then we get a second entry. So if it breaks above there, that's a failure, and that's a good looking, look at that nice move, and then it tries to go lower twice, fails both times off the EMA. That's a nice looking reverse. If we break there, we're probably going to get some stop running, and sure enough, boom, it runs up, and it just gets a little momentum, keeps going, then it just turns, and for whatever reason, it just sells off. And again, you don't really, you get a close outside here, and you go short, and then you just go further short, and so don't try to short this. There's no setup there. It would have worked, but there's no setup. And then we bounce at the lows again, and you get another perfect reversal type setup. And this one breaks lower, turns up. You could trade that on the engulfing bar, but definitely trade this one it closes. Maybe you let it break higher and you just try to get maybe a tick or so better, because it's a fairly big bar for today, especially. But a setup like that on a trap, the trap really occurred on the break higher here, so that's where I recommend trading it. But this is probably going to go higher here. So if you took it with a buy stop or even a limit order, maybe a tick or two in, I'm okay with that. But technically, I'd probably trade that one on the engulfing bar, because that's where the failure occurred, one tick above this bar right here. And we do keep trading higher, but no setups there. And then finally, I treated this as a reversal. Notice there by the count there is a break there, but that looks like all like one move, and then first entry and then second entry, and it actually breaks higher and fails. And again, I like that one maybe on the engulfing bar. I don't think I'd take it way down here. It's a really big bar. If I was going to go short down here, I'd want to see it come back and then give me another bar. I don't trust. It's not very often it'll come back and test the breakout on one and then go lower on the same bar. Usually you're going to get a little pullback first, so I'd be real leery of going short way down there. So if you didn't take this on the engulfing, I wouldn't take it, and it's a little unsure to trade it on an engulfing bar. Although if you went to a slightly bigger chart, there would be a clear failure right there, and that certainly looks like a trap to me. So different way to look at it. I marked it green because it's a little aggressive. And of course, we get a close outside, we move down here, and there's another small bar there, but it's not bullish enough. But you do get a higher low here with plenty of room. I like that one, because you do get your failed breakout, and that turns into a nice move that just keeps going. So if you catch that, you may be able to ride it all the way to the other side, and I don't see any other setups up through there either. So if you're going to take that one, if you didn't take this higher low here, you probably don't get a chance to trade that. And then we get up here, we get a closeout, we get another nice reversal here. Notice that new high, you try to go higher once, twice, and it's just a little bitty bar right there. This should technically be over that bar. I mean, it's tiny, and but it looks like a nice reversal type setup. You can clearly see the two legs down there. Real tiny bar, very low risk, 5 ticks again, and maybe you get a runner there. It drops on down, you find a little support at the midline. Don't go long there because you got too much resistance across there. You got the EMA right there too. But it breaks out, then gives you this big bearish bar, plenty of room back to the midline again, because it might bounce there again, which it does. It actually goes a little lower, because they probably had some longs trapped here and they ran their stops, and then they end up taking it right where those longs thought it was going to begin with. So, but yeah, you got to respect that midline across there, and you can see it ends up, even though it went lower, it ends up holding. So prices drop, it bounces, and you make another, and you got your new low here on this one, but now you run up, you get a close outside new high. I didn't draw that little. There's another little channel there. And you get the close outside, move to a new high, and it turns down. I don't think you want to go short there, but when it breaks higher and gives you a lower high right there, I like going short there. And you could trade that on the engulfing bar. I'd probably wait for it to close since it's above the EMA and let it close below, and then maybe you take that trade. Just make sure you got room to get out before that midline again, because you can see we bounced there once again. And then it runs higher here. No setup there. Too congested. Too much resistance. Nice move, but just there's no setup there. You get the close outside, move to a new high, and then we're turning down. And that pretty much helps you set your channel there. Get the close outside. And I like this one just because we're probably at least coming back to here. And notice you got to move down. First entry, second entry. So it looks like a failure. Uh, Really strong bar. It looked like it was going to go higher, and I guarantee they trapped some people. So when this is your signal bar here, but the failure was when it broke below right there, and you can see how it drops real quick. And quick, that should give you a nice trap and a quick, easy profit. And then, of course, we bounce off the trend line, and that confirms the trend line. But I don't like going long right there. I think you need a higher low or something. And you don't get it. It runs up, and you get a first entry, then a second entry. And look at that bearish bar, and it looks like it's going to be real bearish, and it reverses. I like going long one tick above that because you're going to trap them. I really thought it would go take off and go much higher, but you can still see there's a trap there, and how fast it runs up, and then once they run those stops, it just kind of runs out of momentum. Comes back to the trend line again. No signal bar or anything there. Your failure was technically here anyway, so you can't trade it as that. Just a first entry. We run on up. We come down. It looked like it was going to set up a second entry right there. It doesn't do it. The second entry doesn't trigger till way down here, and you don't want to go long there. But it gives you another reversal. First entry, second entry, and it fails. Gives you a chance to go short and look at it drop real fast. So nice setup there. It's a little late in the day though, and technically, by the count, it's a second entry too. But I'd only count that as a first entry. So if it wasn't for the failure, I wouldn't mark that at all. But you can clearly see the count will give you a first entry, second entry, but that's not a leg up. So it's just one leg up right there. So hopefully that makes sense. And that gets you into 230. I don't see anything else I like there. So. Anyway, that's another look at it. We really traded up from 10 o'clock on the rest of the day and closed almost on our high. So it's on here it just looks like a two-tiered range, but you can clearly see we trended up most of the day from 10 o'clock on. So you just about have to call this a reversal day based on the look of the daily chart. So. We may not get much follow through buying, but I suspect we'll see a little bounce tomorrow. We'll just have to see. I could be wrong. But my experience tells me that we might see that going into the long holiday weekend. But anyway, I hope you've got a good week. I hope you enjoy the Labor Day weekend. Take some time away. Get a break from trading. If you're new to this and just getting started and you want to study, then it's a good time for you. By all means, study. But if you've been trading for a while, it's always good to take a break and come back refreshed. A lot of times you'll come back with a clear mind and you'll take a step forward. So don't be afraid. I can remember when I first started, it's like, man, there's a trading day. I got to be trading. I got to be trading. Well, at some point you'll get to the point where you need to give your mind a break and your emotions a break, because trading is very emotional, especially when you're new. Eventually you'll get to where it's not, and your goal is for trading not to be emotional at all. but it takes a while. So you need a break from all that occasionally, and you'll come back and you'll be surprised how much clearer you'll see the chart and the setups and all of that. So don't be afraid to take a break. But it's 30 minutes here. I'm going to wrap this thing up. Have a great extended weekend. I'll be back on Tuesday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see